Hi, thanks for dropping in. If you've ever wanted to buy an electric car, there is no better time to buy one than right now. In a moment, I'm going to cover why it is a good time to buy, how much you can receive as a tax credit, who can take the tax credit, and when you can apply for the credit. The electric vehicle tax credit has been revamped to incentivize you to go electric. The EV credit is meant to help you save money on that super awesome electric car you've been wanting. If you've been on the fence about whether you should switch to electric, hopefully this new EV tax credit 2023 will make you finally go for it. The Inflation Reduction Act of 2022 has changed the federal tax credits for electric and fuel cell vehicles. We're talking about up to $7,500 in tax credits if you buy a new electric vehicle and up to $4,000 if you buy a used one. That's right, even used vehicles are getting love from Uncle Sam. With a used vehicle, you can get a federal tax credit of $4,000 or 30% of the purchase price, whichever is less. The credit will reduce your taxes dollar for dollar, but you can't get a refund on the credit if you don't use all of it. Now, as you already know, the IRS always has rules in place for any credit or deduction. So let's go over the things you need to know when buying a used electric car to make sure that you can take the credit. 1. The vehicle's model year must be at least 2 years old when you buy it. For example, if you're buying in 2023, you should look at vehicles for 2021 or older. 2. The purchase date matters. You have to buy the vehicle in 2023 or later. If you bought it before 2023, sorry, you won't be able to take the new 2023 EV credit. 3. You must purchase the vehicle from a dealer. You won't be able to take the credit with private sales. 4. If you're thinking of flipping the car for a quick profit, no go. You can't get the EV tax credit if you're buying the vehicle for resale. 5. If you purchase after August 16, 2022, it has to be the first transfer of the vehicle. So please make sure to check the vehicle's history. 6. There's a price cap. The vehicle must cost $25,000 or less. 7. The vehicle's weight should be less than 14,000 pounds. 8. The vehicle must be a plug-in electric or fuel cell vehicle with at least 7 kilowatt hours of battery capacity. 9. The vehicle must be primarily used in the United States. 10. You can claim this credit only once every 3 years. And 11. There are income restrictions. For 2023, your modified adjusted gross income should not exceed $150,000 if you're married filing jointly, $112,500 if you're a head of household, or $75,000 for all other filers. And here's a tip. You can use your modified adjusted gross income from either the year you take delivery of the vehicle or the year before, whichever AGI is less. Now let's shift gears and talk about new electric vehicles. If you love that new car smell and the idea of being the first owner, there's a financial incentive for you too, a federal tax credit of up to $7,500. But just like with used vehicles, there are some things you need to be aware of. 1. The vehicle has to be brand new, no previous owners, no prior registrations. 2. The vehicle's final assembly must be in North America. 3. The vehicle must be used primarily in the United States, so you can't buy it and ship it to another country or anything like that. 4. There's an MSRP limit. The manufacturer's suggested retail price for cars should be $55,000 or less. For SUVs, pickups, trucks, and vans, the limit is $80,000. 5. The vehicle must have a battery capacity of at least 7 kilowatt hours. 6. The vehicle's weight should be less than 14,000 pounds. 7. Fuel cell electric vehicles have a bit of a leeway here. They don't need to be made by a qualified manufacturer, but all other new electric vehicles must be made by a qualified manufacturer. I'll include a link in the description box for you to check your vehicle's VIN number to see if it qualifies. 8. Let's talk income. Your modified adjusted gross income should not exceed $300,000 for married couples filing jointly, $225,000 if you're a head of household, or $150,000 if you're any other filer. And just like with used vehicles, you can use your modified adjusted gross income from either the year you take delivery or the year before, whichever AGI is less. And 9, if your vehicle was delivered on or after April 18, 2023, there are additional requirements. You can only get the full $7,500 credit if at least 50% of the components in the battery were manufactured or assembled in North America, and at least 40% of the minerals in the batteries were sourced from the U.S. or a country with a U.S. free trade agreement. If you meet only one of these criteria, you might qualify for a reduced $3,750 credit. Now, what if you're not just an individual looking to go green, but you're running a business or a tax-exempt organization? Well, the government has got you covered too, and the incentives are pretty good. Just like individuals, business and tax-exempt organizations can qualify for a clean vehicle tax credit of up to $7,500 for commercial vehicles under 14,000 pounds. But wait, there's more. Your business or tax-exempt organization could qualify for up to $40,000 for all other clean vehicles. The EV credit will be the lesser of two things, either 15% of your basis in the vehicle or the incremental cost of the vehicle, up to $40,000. If the vehicle is not powered by gas or diesel at all, the EV credit will be 30% of your basis in the vehicle. So the greener you go, the more you save. However, just like other incentives, this one has some rules too. So let's talk about that. 1, the vehicle must be used in your business or organization and cannot be purchased for resale. So no flipping electric cars for a quick profit. 2, unless you're a tax-exempt organization taking the credit on a vehicle that's not being leased, the vehicle must be subject to depreciation. 3, the vehicle must be used primarily in the United States. 4, your business or organization cannot claim a clean vehicle tax credit on a vehicle if it has already been claimed by another consumer or business. 5, the vehicle must be treated as a motor vehicle and used primarily on public roads or qualify as mobile machinery. Please take a look at your screen to see what qualifies as mobile machinery. 6, the vehicle must either be a plug-in electric vehicle with a battery capacity of at least 7 kilowatt hours if it weighs under 14,000 pounds, or 15 kilowatt hours if it weighs 14,000 pounds or more. Or it can be a fuel cell vehicle that meets the requirements shown on your screen. 7, the vehicle must be made by a qualified manufacturer. There's a link in the description to see if the manufacturer of your vehicle qualifies. 8, there's no limit on the number of credits your business or organization can claim. So the more you invest in clean vehicles, the more you can claim in EV credits. 9, the EV credit is non-refundable, but can be carried over as a general business credit. So even if you can't use it all at once, it won't go to waste. And 10, you can only depreciate the difference between the purchase amount of the clean vehicle and the clean vehicle tax credit you receive. All right, so you have the scoop on the new EV tax credits put in place in 2023. But what does the government have planned for the EV tax credit after 2023? If you plan to buy an electric vehicle in the coming years, you will want to keep two things in mind. First, let's talk about battery components. Starting in 2024, the requirements for the percentage of components in the battery that must be manufactured or assembled in North America will increase to 60%. And it doesn't stop there. It goes up to 70% in 2026, 80% in 2027, and reaches a whopping 90% starting in 2028. And second, the mineral requirements are also set to change. As of 2024, at least 50% of the minerals in the batteries must be sourced from the U.S. or a country with a U.S. free trade agreement. This percentage will increase to 60% in 2025, 70% in 2026, and 80% starting in 2027. So if you're thinking long-term, these evolving credits could impact your ability to take the EV tax credit. But we also have some good news starting in 2024. You won't even have to wait until tax time to benefit from EV credits. That's right, the game is changing. Starting in 2024, you'll have the option to take the EV tax credit as an immediate discount when you purchase your new electric vehicle. Imagine walking into a dealership, picking out your dream electric car, and then voila, you get the tax credit deducted right off the purchase price. No more waiting for your tax return to see your savings. So, how would all this work? Well, you would essentially transfer the credit to the dealer. Then the dealer would simply give you a discount equal to the value of the tax credit you would have received on your federal tax return. For example, if you qualify for a $7,500 tax credit, that's $7,500 less you have to pay up front for your new electric vehicle. So what's the catch? There isn't one really. The dealer will provide you with all the information regarding the discount, and they'll report your name and taxpayer ID number to the IRS. It should be a pretty easy and transparent process. I hope all this information about the EV tax credit has been helpful. See you next time.